Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. How to grow a small forex trading account fast. That is what I will be speaking about in this video, because I have been requested this many times, and there are so many bad ideas about how to do this if you are looking and Googling this or searching for it on YouTube. So I want to give my opinion on what is the best way. So without further ado, let's jump right into it. This will be a very interesting idea. I will also show you a strategy which does exactly that. So make sure that you stick to the end of the video and let's get right into it. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Okay, so first of all, how can you increase the balance of a small trading account as fast as possible? Well, the first way could be just starting to over leverage the account and do any of those crazy things that you see on YouTube videos if you start Googling for this. That is essentially gambling, which is completely different from trading. Those are two separate things. So no, the best way is not to just starting to take huge amounts of risk with even not really tested strategies. So that is never a good idea. Okay. So let's first of all clarify that. My suggestion on what you're supposed to be doing if you're looking to scale a small trading account is looking to exploit the beautiful thing about compound interest. In fact, if you ever looked up at what compounding actually is a very interesting concept when it comes to growing from a percentage perspective in a consistent way a number. And if you look at the compound growth graph, it will look like something more or less like this. Okay, so at the beginning, you will not really see if, let's say, for example, you're increasing in account, let's take as a benchmark 7% per month on average, okay? And that is extremely difficult, but at the same time, it is not impossible, okay? In fact, I will now show you a backtest of an algorithm that I have developed of a trading strategy, which does have an average of around 7% per month. Obviously, some months will be less, some months will be negative, but overall, the average, if you do a long-term backtest of my algorithm, you will see that, and we will do that by the end of the video, the average is around 7% per month. So we will be taking that as an example just to explain this concept, because really, I do not suggest that you just go around starting to gamble your funds on your broker just because you want to increase it quickly. That is the easiest way to just blow an account. Okay, always risk management is key, and this, which I'm about to explain, is the best way, in my opinion, to grow a small account using compounding. Because as I was saying, at some point, if you are growing an account and you're growing it consistently, the curve that you're looking at is this one, especially if you're looking at not a fixed lot per trade that you're looking to risk, but if you are risking a percentage of your account on every single trade, that is already exponential by nature, mathematically, because you are in fact risking a percentage of the account. So as the account increases, the percentage that you're risking in dollar terms or euro terms or whatever the base currency is increasing as the account increases. So it is already exponential by nature. So the curve that you're looking at is something like this. Now, at the beginning, it will not feel exponential. And that is the most difficult part when it comes to the psychological side of it, because it will seem like a small increment. But as the time progresses, the slope of the curve will continue to be always more inclined vertically. So that is where you really start to feel the compound effect. Now, just to give you a bit of context before I lose you, because already I know some of you will already start to lose them on this. Let's go and make a quick test and see what 7% gain per month, which some of you that are maybe new to trading will think, oh, that is very low. No, that is huge. Okay, 7% per month is a lot. It's very, very difficult to achieve. And people that tell you that 7% per month is easy, they don't know what they're speaking about. Now, let's use a simple compounding calculator. We take 7% per month as a benchmark, and we're going to compound that for 10 years, because we will be doing also the backtest of my algorithm on around 10 years. So the periods will obviously be 120 because it will be 12 months for 10 years, so 120. And we will be taking a very small account balance, okay? We will be taking 1,000 euros or US dollars or whatever it is as the starting balance, okay? Now, this calculator will simply compound that $1,000 at a 7% per month gain for 120 periods, so for 10 years. Now, on the top of your mind, if you're asking yourself, how much will that be? Well, probably lower than what it actually is, because you will now experience the full power of compounding on a consistent basis for 10 years, what can actually bring you. So what you can see here is that we have here our 120 periods here on the left. And for every row, we have the increase essentially. Okay, so the first month, the total profit will be only $70. Let's say it's dollars, $70. So the balance will be 1,070. So you trade a full month and it's only $70. And most of you already will say, okay, let's gamble it away. And that is what is happening most of the times. Some people actually have created, for example, a bot, an EA that does have solid returns and is tested, and they just cannot be patient enough, and they will just not let the account grow, and they will start taking huge risk, which and then in the end will make their account be blown essentially. So as you can see here, the total profit after the first month is 70, and then it slowly grows. Okay, now at the end of the first year, after 12 months here, this is at the end of the first year, the account is only like 2,252. So the profit is only 1,252 after a full year of trading. Okay, so it might seem not much because it's a lot of effort, and unless it's trading automatically. So in that case, a lot of effort is in building the system, then not really making it run because it runs automatically. But if you start to scroll down, you will see that at the end of the 10 years, actually, the $1,000 initially has now become 3,356,788. So from 1,000 all the way up to 3.3 million, so a multi-million-dollar account just with a 7% per month growth, which again, many people think is not a lot. That is why it is a lot, because compounding is really powerful, okay? I think it was Einstein which also said it's like one of the miracles of the world is compound interest, because it allows numbers to grow this quickly, because again, the curve is looking like something like this. In fact, I also made here a plot for you so you can see it better. I asked chat here to show the plot of an account growth of 7% per month over 10 years. And the vertical lines are essentially the vertical lines are every 2 years, just to show you that at the beginning, okay, here, and here, this is after essentially at year 7. So after 7 years, you don't really have that much. Well, you're starting to see the compounding effect, but not really that much. But then at year 9, at year 11, that is where you're towards the end, that is where you really start to see the full power of compound interest. So you have to be able to wait through all this time, which is the most difficult part, okay? Well, I would argue that the most difficult part is creating this strategy, which gives the possibility to do this because, again, it's very, 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 very difficult. But then the second challenge is also having the patience of waiting through this. Now, obviously, what can be an easy way to, let's assume you have a system which can bring this, okay? Now, if you have a system which brings this, an easy way to start to get to the compounding part where you really start to see the effect as quickly as possible is doing, for example, contributions to the account. So you continue depositing when you have money into the system. Okay. Now, obviously this decreases massively the amount of time that it takes to get to the more, let's call it, juicy part. Now, in a situation like this, okay, do you think that it is completely, now that you see something like this, do you think that it will be, again, the same thing if we increase the amount of years, let's say to 20 years instead of 10 years? Now, obviously, if we increase this to 20 years, we are giving 10 more years, starting from the best part to the compound effect. So the number that we will now see, if we put 20 years or even 15 years instead of 10, will be huge, right? It will be a huge difference. So it's all about really getting to the real powerful compounding side in order to turn a very small account to a multi-million account, obviously all from a math standpoint for the examples that we're doing here, just to explain the concept from a mathematical standpoint. So if we put here 240 instead of 120, so essentially this will be 20 years. And we recalculate this, what you will see, instead of 3.3 million from 1,000, you will see a huge number. I don't know what the number is, but it will for sure be a huge number, much, much higher. As you can see here, that is essentially a huge number. That is 11,274,741,824. Okay, so from 1,000 to $1 billion account. Now, obviously, this is all from a theoretical standpoint because there are obviously so many limitations to this, including liquidity, slippage. The orders would become huge. So obviously, this is just to explain the concept. So from 10 years to 20 years, it's not like, if it was 3.5 million after 10 years, it will be around 7 million after 20 years. Obviously not. You cannot just double that because, again, it is exponential. That is why you go from 3.5 million to 11 billion, okay, with just 10 years, because it's all exponential. So before I then show you that it is not impossible, it's difficult, but it's not impossible to have consistent systems also automatically. I will now show you, because most of my trading is anyway automated. So I will now show you one of my algorithms which achieves something similar in the last 10 years for the sake of this example. But what I really want you to understand is that the best way to grow an account is to have a stable system which does have an edge over the market and not just gambling the money, because that is the easiest way to just blow an account. So let me now pull up my backtester and my EA, and let's create the complete backtest. So I have here my MT4 terminal open. I have already loaded here the backtester. So let me quickly set the properties. So the initial deposit, obviously, we will be testing the algorithm with a 1,000 deposit. So just to follow through with the reasoning over the entire video. Obviously, no optimization we will be doing now. And we will be testing it on every tick, which is the most precise method to run an algorithm on past data. And with the current settings, this EA that I have, which I call Terminator because I like the name, will be trading on USD/JPY with the current settings that I have put in the code. So this will run from 2014 to 2024. So essentially the last 10 years. So let's run it and see how it goes. So I have here the graph open, and then we will see the entire power of compounding over 10 years with this algorithm running on past data, which is as close as we can get to essentially simulating past performance, taking an algorithm and then running it over past data. That is how essentially that is the best way to develop trading strategies, in my opinion. So as you can see here now, quite some time has passed, and we're still sitting at around 5,000. Now 6,000 is the account balance, 8,000, 10,000. Obviously, there are periods where the expert advisor is losing, some periods in which is winning. Is obviously an average of no strategy can just always win, right? There will be losing periods, there will be winning periods. That is part of trading. Now we are at around 29, 22. Now this is a drawdown period for the strategy. Now we're around 30,000 account balance and growing now 40,000, 50,000. You can see now how quickly already is starting to scale, right? That is the exponential side, because currently it is risking 3.3% per trade of the account. And now we already took around 1,700 trades at the moment. 1,700, 1,800. So now 2,000 trades essentially have been placed. The account balance is around 150, now already 200,000. You can see now how quickly it's starting to scale, because now when it gets to 200,000, it's risking 3.3% per trade on the 200,000, right? So you start to see that the curve is starting to look as the one that I have shown you from a theoretical standpoint, okay? This is a real algorithm running on past data, a strategy that I have developed. Now we are already in the millions when it comes to the account balance. And now the test should almost be over, because obviously we're at around 3,000 trades. So that consider this EA trades basically almost every day. So yeah, in fact, it's closed. So we are sitting now here at around, as you can see now, the account is almost 3 millions, right? And this has been done on 10 years, right? So you can see here the account growth was in the exponential side, because it was risking exponential a percentage of account per trade. So as the account was growing, the risk per trade was growing with it, okay? So after 5 years, you can see there was not that much growth, but then that is where things really start to get juicy. In fact, if now we decrease this backtesting period to the first, let's take the first 5 years or so, we can see a completely different scenario. Let's just wait 1 second it will not just be, okay, it was around 3 millions after 10 years, okay, it will be around 1.5. It will be much, 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 much lower because of the compounding effect that happens in the last years. You can see here that now when we finish the test here, we will have a much, 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 much lower account balance. Okay, now around 1 year has passed. This is just to give you a complete overview of how then the compounding effect happens. Okay, so as you can see, at the end of 5 years, we're at only 40,000 account balance, right? So then in the following years, it goes from 40,000 to was almost 3 millions. So essentially, all the exponential growth, the big growth is coming in dollar terms, is coming in the last years. In a percentage terms, it's pretty much the same. That is because of the power of compounding, which is the entire point of this video. Now, obviously, when you have simulated performance, so you're running an algorithm on past data, you're not accounting for slippage, you're not accounting for a lot of things. So it's now not always exactly the same, but it's the closest as you can get when it comes to developing trading strategies. That is all. You cannot know the future, but you know the past. So you can kind of run algorithms on it and try to account for all the different factors that could have happened if actually you're running that live. So what I like to do, for example, this is just on a side note, I sometimes like to increase spreads more than they actual are in real-time markets, because obviously here you cannot simulate slippage. You can, but you have to do it from inside of the code. So it's always a challenge to try to match backtesting performance to actually real market performance. But this was perfect to explain to you the concept of compounding. So I hope that this will not make you gamble your account away and actually start to learn trading more and put your effort, instead of gambling your account away, into trying to develop systems which do have an edge, potentially automated systems, and just letting the account grow with your system taking advantage of the compounding factor, which is the best way to actually grow a small account. It is not by gambling the money away, using huge lot size and over leveraging the positions. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the COT data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.